In a recent CNBC interview, Michael Schumacher, head of macro strategy at Wells Fargo Securities, shared his insights on market volatility and the Federal Reserve's outlook. He noted that sustained uncertainty and elevated risk premiums are keeping investors cautious.
To the point many people have made here, the rules aren't clear, the volatility is extraordinary, so it's hard to make a big business decision, big investment decision. It's just not the right time to be a hero today. I think the passage of a little more time and also perhaps a little more of a concrete idea from President Trump. What exactly does he want to see on tariffs? Is it generating revenue? Is it targeting particular objectives like fentanyl? Is it something else? People don't know. Maybe we get some of that in a few minutes today, perhaps. But I think a little more clarity from him will go a long way to boosting confidence.
Schumacher emphasized that while markets are pricing in Fed rate cuts later this year, he believes such expectations are premature. The Fed needs several months of improved inflation data before making a move, likely pushing any cuts to July or beyond. Meanwhile, he warned that prolonged volatility, driven by trade tensions, could continue shaking up equities and bonds. The market is in turmoil, panic has taken over, and most investors find themselves paralyzed, unsure of what steps to take next. However, this crisis might represent the greatest opportunity for wealth creation in your lifetime. Every downturn sends investors into a frenzy of indecision as they wait for the perfect moment to jump in, convincing themselves that prices might fall even further. Then, when the market suddenly surges, those who hesitated are left on the sidelines, filled with regret for every lost moment. This cycle repeats itself relentlessly. The market marches on regardless of individual actions. It's important to realize that the market doesn't pause for anyone. It moves whether you're participating or not. If you aren't actively involved, you risk missing out on every chance for gains. Now let's examine the state of penny stocks in 2025, particularly within the tech sector. In this dynamic arena, stocks can soar to great heights overnight or tumble just as quickly. With artificial intelligence and next-generation computing revolutionizing entire industries, the right tech penny stock could deliver transformational returns, provided you approach your investments with strategy and care. Although these stocks carry a high level of risk, they simultaneously present some of the most lucrative opportunities available today. Remember, there are no shortcuts to wealth. Sound investing is rooted in thorough research, patience, and effective risk management. Always ensure you do your due diligence before committing to a purchase, as this is far from a casino gamble. For those ready to embrace calculated risks, technology penny stocks are carving out a path to substantial growth. Tech is shaping our future, and early investors have a chance to ride the wave of innovation. Today, I'm unveiling a selection of high-potential stocks. These choices aren't arbitrary, but represent companies with genuine catalysts and promising breakthroughs powered by AI and other cutting-edge technologies. If you're enjoying these penny stock picks and finding the video useful, please take a moment to hit that like button and subscribe. It truly helps the channel grow and lets us keep delivering more great content. Let's begin with Taoping Inc. Taoping is a tech company that operates at the intersection of digital advertising, cloud computing, and smart city solutions. They offer integrated systems that leverage artificial intelligence, big data, and cloud platforms to transform urban landscapes. If you've noticed digital billboards and interactive ad displays in cities, it's very likely that companies like Taoping are behind these innovations. Their technology-driven ecosystem, bolstered by strategic positioning and collaboration with top tech talent in smart city technologies, gives them a significant competitive advantage. An interesting fact about Taoping Inc. is that they not only focus on technological innovation, but also place a strong emphasis on aligning their leadership's interests with the company's growth through unique incentive programs. This strategy has contributed to retaining top talent and driving further innovation. Beyond its technological prowess, Taoping Inc. has marked several impressive milestones. For example, on December 27, 2024, the company awarded 2 million restricted shares to its directors, executive officers, and employees, an initiative designed to boost retention and align the team with the company's performance. Then, in July 2024, Taoping reported a 30% year-over-year increase in total contract revenue, driven by robust demand for its AI-based products. These developments underscore the company's commitment to internal growth and market expansion, solidifying its position in the smart city and digital advertising arenas. Now let's delve into the numbers to understand why Taoping Inc. is poised for significant growth. In the first half of 2024, the company generated $18.1 million in revenue, a substantial rise from $4.1 million in the same period in 2023, a year-over-year increase of 28.4%. This remarkable growth stemmed from three primary drivers: a $3.2 million boost in sales of servers, cloud-based screens, and terminals, an additional $1.3 million from advertising revenue, and a $0.2 million increase in software revenue. This diversified growth indicates that Taoping is successfully broadening its business footprint, with its advertising segment gaining notable traction, an essential component of its long-term strategy. With forecasts predicting even higher revenue in the latter half of 2024, investors should certainly pay attention. On the cost front, however, there are challenges to consider. The cost of revenue climbed from $10.2 million in 2023 to $13.9 million in 2024, rising from 72.5% to 77.1% of revenue. Although this isn't necessarily a cause for alarm, it does signal that Taoping must focus on streamlining its expenses to further enhance profitability. For instance, during the first 6 months of 2024, the gross profit margin fell to 22.9% from 27.5% the previous year. The company anticipates that margins in its advertising segment will stabilize in the second half of 2024, and ideally they will improve over time. Perhaps the most exciting development is Taoping's turnaround in net income. The company shifted from a net loss of $1.8 million in the first half of 2023 to a net profit of $0.6 million in the first half of 2024. On a per-share basis, this represents a transformation from a loss of $1.10 per share to a net income of 13 cents per diluted share. This progression demonstrates that Taoping is not only increasing its revenue, but is also effectively converting that growth into profit, a rare achievement among many penny stocks. I'm particularly optimistic about Taoping Inc. for several key reasons. First, the burgeoning smart city market is attracting billions in global government investments aimed at integrating AI, IoT, and digital networks into urban centers. As a China-based company, Taoping is strategically positioned to capitalize on China's aggressive push for technological innovation, especially in smart city infrastructure, AI, and 5G integration. With strong government backing and a thriving tech sector, companies like Taoping are set to benefit enormously from policy incentives and targeted investments. Although Taoping currently trades as a penny stock, its robust business model and rising revenue could drive significant upward movement in its share price as investor recognition grows. Additionally, the company's recent financial strategies, including cost-cutting measures and the expansion of high-margin services, indicate a focused effort to enhance profitability. Of course, risks such as market volatility and potential regulatory changes remain, particularly for a China-based company, but the favorable tech environment and government support could very well mitigate these concerns. Next, let's shift our attention to Pixelworks Inc., trading under the ticker symbol PXLW. Pixelworks is a leader in visual display technology, specializing in high-performance video processing and display enhancement solutions. Their innovative technology delivers some of the clearest, smoothest, and most immersive screen experiences across various industries. Whether it's enhancing refresh rates, HDR quality, or reducing lag for mobile gaming and streaming, Pixelworks is at the forefront of delivering cinema-quality experiences right to consumers' homes. Headquartered in Portland, Oregon, and operating globally, Pixelworks supplies cutting-edge display solutions to major players in the tech industry. With the advent of artificial intelligence, virtual reality, and 8K displays, the company is positioned as a key player in the next tech revolution. It's worth noting that Pixelworks has a fascinating history in display innovation early on. The company was a pioneer in developing technology that dramatically improved visual performance in consumer electronics, setting the stage for today's advanced display systems. Now, why does Pixelworks stand out as a promising stock? The display technology market is experiencing explosive growth, driven by smartphones, gaming, and AI-driven video processing. Nearly every modern device, from mobile phones and laptops to smart TVs, relies on high-quality visual processing, and Pixelworks is uniquely positioned to benefit from this trend. Companies across the board are heavily investing in AI-enhanced video processing, and Pixelworks technology is engineered to deliver smoother, more lifelike visuals with faster connectivity and reduced lag. These market trends suggest that Pixelworks could see significant expansion in the coming years. Let's take a closer look at Pixelworks' financials. Although the company experienced a revenue decline in 2024, reporting $43.2 million compared to $59.7 million in 2023, it is actively shifting its focus from mobile devices to home and enterprise markets where sales are on the rise. This strategic pivot is evidenced by rising gross profit margins, which signal improved efficiency and profitability per revenue dollar. Moreover, the company has significantly reduced its operating expenses from $13.5 million in the previous quarter to just $1.5 million in Q4 2024, indicating a move toward a leaner and more profitable future. For instance, Q4 2024, GAAP gross margin reached 54.6%, up from 44.7% in Q4 2023, and full-year GAAP gross margin improved to 51.6% from 43.1% in 2023. Additionally, while Q4 2024 net loss was $5.4 million, a marked improvement from $8.1 million in Q3 2024, the full-year net loss narrowed slightly from $26.2 million in 2023 to $28.7 million in 2024, showing consistent quarter-over-quarter improvement. Adjusted EBITDA also swung to a positive $3.6 million in Q4 2024 from a negative $6.3 million in Q3, highlighting enhanced financial efficiency. What does this mean for investors? First, there is tremendous potential here. Pixelworks is still trading as a penny stock, but its long-term prospects are enormous. Rising profit margins and improved financial discipline are strong signals that the company is on track to achieve profitability as revenues stabilize. Positioned at the heart of fast-growing sectors like AI, gaming, and video processing, Pixelworks is preparing for a significant rebound in revenue. For those willing to invest early, the potential upside could be substantial. In summary, these two high-potential technology penny stocks, Taoping Inc. and Pixelworks Inc., could be gearing up for substantial moves in 2025. As the tech landscape evolves at a rapid pace, opportunities in areas like AI, blockchain, cybersecurity, and next-generation software could transform modest investments into significant gains. If these stocks catch your attention, remember to conduct your own thorough research and ensure they align with your investment strategy. If you're finding this analysis helpful, please consider liking, sharing, and subscribing to support the channel. Your engagement is vital in helping us continue to bring you detailed insights into the most exciting stocks in the market.